Good day, everyone. I'm Donna Daniels, DAL Inc. Thank you for attending the one-on-one conversation, the move to digital payments and what it means to the credit manager with our industry expert, Mitch Rose, Senior VP of Billtrust. Mitch, thank you for being with us today. I know it's been a big year for Billtrust, going public and ringing in the bell on Wall Street.
Yes, it certainly has been a big year for us. So thanks for having me. I appreciate it. As you know already, I've been with Billtrust for quite some time, and I've known you for a long time, and I'm looking forward to talking about one of my favorite subjects, which is digital payments.
And I know that you have a lot of valuable information to give, so let's get started. So digitalization has been the goal of many companies for quite some time now, but due to the pandemic, it's become a big buzzword this year. So what exactly are digital payments, and what have you seen this past year happening in payment processing?
So that is a good question. And the definition is pretty simple, at least the way we look at it. Mm-hmm. Digital payment is almost any payment that's not a check or cash. So, you know, the most common forms, which we're all familiar with, are customers paying by ACH, and that could be like via an EDI type payment, or it could be a payment coming by credit card. It could be a wire payment, but those are the most common forms of digital payments that we're all facing right now. Mm-hmm. And, just one quick comment on digital payments in general is this past year has been a major transformation in digital payments.
Big time.
One of the bigger drivers of that was the pandemic. There are other drivers, which we might want to talk about later, but for sure, the pandemic, where a lot of credit professionals and not to mention the customers of the credit professionals were all remote. And then the question became, for the end customers, the buyers, how do they make payments? Mm-hmm. If you're credit professionals and you're involved with accounts receivable, how do you get those payments? If everyone's remote, that became more of a challenge than ever. And one of the more common answers was electronic payments, paid by ACH, paid by credit card. So that's why we saw a big transformation this past year.
And even with DAL, we would mail our checks out, and we found that they were sitting at branch offices. So we revamped and told everybody we can have a send check to address. And well, we've always had that in place, but we let our clients know about it so that we can make that changeover, that transition, and get those payments into them as quick as possible for their cash flow.
Yeah, and the good news for credit professionals is versus a customer sending a check, the digital payment typically came in faster, which was great because we're all focused on DSO. Mm-hmm. The news for credit professionals is a lot of time those electronic payments come separate from the remittance information. So mm-hmm. You get a payment for $1,000. It's not so great if you don't know what invoices to apply it to because you have remittance information. So the biggest challenge with electronic payments is this concept of decoupled payments, that the remittance comes maybe to a company by email, whereas the payment goes to the bank. And so the challenge becomes, how do you match those together? And another challenge for credit departments and accounts receivable in general is a lot of those digital payments can cost more because some of them come by credit card and they might have higher
interchange. Now you have fees on top of that too.
But again, offsetting that is the fact that they come in faster.
Right. So how does a company, if they're having the payment come in and then the itemization somewhere else, and how can they match those up? Is there an easier process to do that?
There definitely is. And I think we could hit, well, let me just say this too, even before we get there. I mentioned to you that, a big driver of digital payments was the pandemic. Mm-hmm. It's created some advantages for credit professionals in terms of getting paid faster, obviously, but some challenges. The biggest thing is what we're seeing is it's not going to go away. This move to digital payments, it's not just because of the pandemic and the remote workforce, because the reality is people will come back to work.
Mm-hmm. Yes.
But I've been with Billtrust for 14 years, and ever since I started, we talked about checks are going to become the ancient past, and they're going to go away. But year after year after year, for the most part, the customers paying by check stayed right around 50% and didn't change.
Mm-hmm.
All of a sudden, we saw a big drop this year. New data shows check volumes down to 43%. That's a big shift. That's not just because of the pandemic. There's a few other things happening that are driving the shift. So they're worth talking about before we start talking about tools and how do we deal with it. So besides the pandemic, another major shift is the United States Postal Service.
Mm-hmm.
So for the last 10 years, they've been losing billions of dollars a year. They've been cutting out some of their locations. They've been cutting down on their staff. And the result of that is longer mail times.
Mm-hmm.
That can have a big impact on DSL. 50% of your payments were coming by check, and it was taking 3 or 4 extra days for that check to get to you. That's going to add to your DSL.
Mm-hmm.
So a lot of companies have already been pushing their customers to electronic payments. So that's another reason we're seeing the shift to digital. A third reason are some of the natural disasters that have been occurring the last few years. You know, we had a few customers we were talking to recently that their lockbox was in Dallas.
Mm-hmm.
And when Dallas had all those floods and the power grid went out, their lockbox stopped processing for a few days.
Wow.
That's a major impact on them getting their data.
Mm-hmm.
And that only relates to checks. And along the same lines with the pandemic, when it first hit and everybody went home, the lockboxes stopped processing data. Again, that has an impact. So now more and more companies on their own are really saying we need to have more tools in place so our customers can pay us electronically.
Because in the past, the lockbox used to be, oh, that was a great resource, right? That goes in, it goes right into the bank, and then we match it up after that. And
that was state of the art, and
right, that was the way to go. But now you're saying that's even becoming a problem. And it's,
right,
not just.
And then the one last trend, and then I think your question about tools, that's really interesting, is when we think about our customers. And I know you and I were talking about this the other day, and it could get a little confusing, but the reality is accounts payable platforms are exploding. And I'm sure some of the people that are going to be listening to this, their companies are investing in accounts payable technology. But if you think about that end customer, I don't care if they're, obviously big companies have been investing in accounts payable platforms for years. But now we're seeing mid-sized companies and even small companies. So accounts payable platforms are being offered by banks. There's a lot of third parties. Everybody knows Ariba and Tungsten and Avid Exchange, but there are more and more of them. And as more and more buyers start using accounts payable platforms, that means more and more buyers are going to start paying electronically, because a key part of these account payable platform technology is the sending of the payments electronically.
So, Mitch, why does a credit manager need to be concerned with the different AP platforms, and how does that affect the credit department?
Yeah, so and I'm sure a lot of credit managers listening to this, when I answer this, will go, oh yeah. So first and foremost, these account payable platforms, and there are over 100 of them. There are so many of them. A lot of them want you to submit invoices into those platforms. So for credit managers to start getting paid, step one is you got to get them the invoice. And now they got to log into a portal and load in an invoice or submit data. And if you have thousands of customers and they're using lots of different accounts payable platforms, it could add a lot of time to the credit professional's week just to submit the invoices.
Mm-hmm.
The other side of this story, which is getting back the payment. So one of the reasons they have to be concerned, the credit manager, is the payments come electronically. A lot of times to get the remittance, so you know what was being paid,
mm-hmm.
you have to go log into a portal and pull down the remittance information. Or again, the remittance will come in an email and then you have to match it to the payment, which again adds a lot of labor.
It sounds like it.
Credit managers have to be concerned. The good news is they can get paid faster. And the good news is it's usually a lot more secure
mm-hmm.
with accepting payment.
Mm-hmm.
The bad news is matching it up with the remittance.
Yeah.
It could add a lot of labor to the process.
So what is a credit manager to do?
What to do?
The big question of the day.
And this is where we can get into a couple of stories. So first off, there's a company, East Coast Metal. They're a plumbing HVAC distributor in the South. They're in multiple states. They're an example of a company that's gotten ahead of the curve. They have an online portal where they've been pushing their customers to the portal for years. So for them, now they're getting like 58% of their monthly payments are coming through the portal. So they're no longer relying on the Postal Service, and their DSO has been reduced by over 3 days because they've done that. So that's one example.
On top of reducing manpower.
On top of reducing manpower, because almost all those payments that go through the portal automatically match to the invoices being paid and applied in the ERP. So it's a no touch. Very important story. Another one is a waste management company. That's again in the B2B space. They're called Action Environmental. They have a lot of customers using accounts payable platforms. So they're getting a lot of these payments that are coming to them by email, where then they have to go out to a site to just pull down the 16-digit credit card number. You know, it was a lot of manual work for them.
Wow.
They implemented technology that automates all that. The emails, they could go out to the sites, automatically pull down the data, automatically match it to the remittance. And for them, they eliminated like 70 hours a week in manpower.
Wow.
They also saved on credit card fees because a lot of the technology they could use could reduce the interchange. So they saved like over $100,000 a year in credit card fees.
Wow, that's a big number.
Technology.
That's definitely a big number. Also, the credit manager, so this is really good stuff. So with the AP platforms, the credit manager needs to be concerned about that because of the time involved with just submitting invoices and getting the payments back into their system and the back and forth. And if you can automate, I always say, whatever you can automate, you automate. That's always the best way to go, right? Especially in today's economy and where we're going. So that's great that there are tools out there for the credit manager and for credit departments to use to do that, which obviously Mitch has seen firsthand that it decreases your DSO and increases your cash flow. So the credit manager also needs to know about impending trends. What else is happening there, and where's Billtrust going moving forward in the payment processing world?
Sure, and you're right with credit managers. You know, you need to be prepared. Digital payments are here; they're growing. Few options. One, you could just have people, and you could handle them manually. That's not the worst thing in the world, but as you said, I think most companies want to look for ways to automate. Another one is companies internally could invest in tools like RPA, robotic process automation. A lot of these processes are redundant. And once you figure out the steps, you could potentially map them out and use RPA technology. But a really good solution that credit managers should look at champion is using third-party tools. Because and yeah, sure, like Billtrust, and there are some other options, but key in that is that you need to understand the trends that are coming your way. The system is a mess. It's not going to get any better. You could Google articles from the last month where the Postmaster General is talking about cutting back even more. AP platforms are going to continue to push across accounts receivable departments to all their customers, all the buyers, and that's just going to get worse. So yes, we need to be looking at the tools now. Don't wait until it's too late.
Right, or to have to staff up and train people that if you look to the third party while it's happening, you'll be prepared and be right on board, and you can cut that middle part where they're growing pains. You can cut the growing pains out, right? In doing that. Well, Mitch, you gave us a lot to think about outside the box in digital payment world. If you can give our listeners one key takeaway today, what would it be?
One key takeaway, I would just reiterate, now is the time. Again, being here 14 years, I've not seen this kind of a trend before. There's multiple things driving this digital payment transformation. And I think it is really good to just take a look at your company. How are you matching electronic payments with the remittances? Are you having to submit invoices into portals? Are you having to pull payments out of portals? And how much labor are you putting in today? And assume that's going to double over the next few years.
Mm-hmm.
If that's the case, now's the time to be looking at tools.
So if you feel that pain right now, to look to it and don't wait till it gets overwhelming, and then you're just swimming, and you're just trying to stay above water. So good, that's great to hear. I always think Billtrust is always on top of what's happening, the pulse of what's happening and what's going to be happening, and staying on top of that, and one step ahead of the credit team and the order to cash process, so that you're always there for what your customers need you for. So, well, that's going to be a wrap up for today, though, Mitch. So thank you for your time. If you have any questions for Mitch or myself, please, our contact information is below. We encourage you to reach out, and please keep DAL in mind for any of your commercial collection needs, and Billtrust for your order to cash needs as well. Hope you can join us again. And for now, be well. Thank you, everybody.
Thanks, Donna.